Hello, hello, hello. Happy Monday, everyone. Another backloaded end of the week with GDP and PCE numbers coming out. How's everybody doing? More weakness to start off Monday. We'll have to see if that continues into the open. Interesting with some pattern shifts at the close last week, but hope everyone had a good weekend. Hello, Patrick. Good morning, Sterling. Thank you for putting in the news. The news. Good morning, Jacob. Who else do we have here? Yeah, Goolsby's was speaking. I think he's done now. Yeah. Good morning, Richard. Interesting. Sheila Bear. Is that Bear or Blair? I forgot how to say her name. Is making the rounds now. I don't think the bank should be bailed out either. But the problem is you got too big to fail banks. But the more you bail things out, the more they just get bigger and they get more unfailure. Unfailure. Hey, Osh is 22. Heavy on the Mike Arnold 2 cents, please. Could translate to $1 or more. Oh, that's a good return. 2 cents for $1 or more. That's what, 50 to 1? Is that 51 risk reward? Hey, Martinez. Hey, Eric. Go, thank you so many people for tuning in this morning. Let's just get this started and you'll get my 2 cents. Now, I'll just give you my overall 2 cents. At least for the next little bit, even on, I'm expecting a bounce to come in at some point because just of where we are with cycles. But the bounce should only be a bounce. The bounce should just be a little bouncy, not an overall change in direction yet to any more major bull case. On the ES double top, do you put any weight on the continuation contract ES versus the actual ES23 not quite reaching the 75% retracement? If it doesn't, yeah. If it, and we can talk about that later. Probably not a conversation for this morning. The way I have to get into this. I'm trying to use the adjusted. I used to back adjust slightly differently. Than there's different ways to back adjust. So, and it changes the probability slightly, but if a back adjusted versus non back adjusted reaches the minimum for a double, I'll still use the targets, because again, the reason I use the harmonics is because they test out better. But I mean, if you want to goal seek it and actually, if I spent the time to figure out the actual highest probability for a double could be 76%, could be 74%. I'm not trying to do that. I'm trying to give it a range. So, but I'm more interested in the bigger monthly double tops if they ever trigger. Other than that, because the doubles just give you targets, but you can also come up with key pivot points once they're broken down. You can just use other targets along the way, and I'll gauge that in terms of whether back adjusted or a non back adjusted had a double. So that's the way I look at things. But it's a very good question, MJ. All right, let's just go through what's coming up. We already had Chicago Fed National Activity Index coming in weaker than expected. We have the Dallas Fed Manufacturing Index still forecast to be in contraction, and we have Cash Kari speaking after the close today. Tuesday, we have again the weekly stuff. The home prices. We have consumer confidence at 9 tomorrow. We have Richmond Fed and Dallas. Richmond, so we got the regional indices. We got more Fed speak. Wednesday, we have durable goods. Sort of getting into more important stuff with durable goods. But Thursday, we have the final Q2 GDP, the PCEs for Q2. So that's important, along with, of course, the jobless claims. And then Friday, we get the core PCE index and the PCE index for August, which that's when the Fed's preferred gauges. So really backloaded starting Wednesday. So far this morning, we see the mega caps in red, a Tesla rolling over. Amazon's the only stronger thing. Little mixed in oil and energy. Let's do a quick refresh on the scanner. Utilities are the only thing that's positive, and they're only positive by 0.02%. So, or 0.02 2. So that's where we sit there. Fed watch is still pause through June. No changes there. Fear and greed still now in fear mode, but that does not mean you automatically look for a bottom yet. Any bounce for me is at least temporary. In terms of very light earnings this week, Costco after the close on Tuesday, Micron after the close on Wednesday, Nike after close on Thursday. That's about interesting. The only thing other than that is CarMax will be interesting from a used car perspective and how that's sitting right now. Now, from the bigger perspective, I want to point something out. Last week, the close, Friday was very weak. And it was not only set a new, so we have now a lower high and a lower low and a lower close to confirm the lower low. So the patterns definitely shifted. The last time we really made a lower low, we had a little wiggle in here, but if you look, since the October weekly lows, we've been making, this was, all right, we had a high, a lower, a higher low, a higher high, a higher low, a much higher high. Then we came up with still a higher low, but it rolled over. It rolled over. And we have some of this pattern playing out with the head and shoulders. This is the sort of sloppy horizontal neckline head and shoulders. We've returned to the weekly 50. And we're getting to the bottom of this channel. So we could be getting, especially maybe turnaround Tuesday, we're getting to cycles at the bottom, closer to oversold, and we're getting into some key support level. Also, if we take out this next harmonic, if we take out the next 43.28 area, we have a cluster, the flat 200 and the 37.5 at 4,300. Would I be surprised to see that taken out? In the near term, no. I shouldn't say taken out. I should say tested, and this will be a very strong support area for at least a bounce. Now, going back to here, in order to change this pattern around, we'd have to take out the highs from the 28th of August and get a close higher than that same week's close. So that's the only thing that would shift the pattern in the short term. Other than that, any move up would just be a bounce with a expected rollover, and we don't have a strong bottoming pattern yet. Okay? So, any bottoming pattern right now would be minor. Keep that in mind. Now, we could get one to unfold this week. Remember, that's why we have to do our analysis every day. I just want people to remember, though, that we're coming into a very key support area for at least a bounce between this 43.28 and 4,300. And then the key resistance is now this breakdown level about roughly about 44.20 to 44.25 with the declining rotation zone, which is now separating. Also from the weekly, we're below. Remember, we came down, we caught on the weekly rotation zone, rotated up, and stalled out. And with last week's close, we're also below the weekly rotation zone. A lot of stuff shifted. Now, for the NASDAQ had the lowest close since, back in the June time frame, but did not make a lower low yet. To this week, we're going to see. It looks like we're coming in to 14,804.25, 14,782. So this is now a lower low, but we're going to have to see how this week closes. Again, I have these sloppy head and shoulders targets on this. The next major target for the NASDAQ is back at the 50 on the 50 week. Now, we're going to probably see a bounce before that. On the daily, I'm watching closer to this 14,680 to about 14,625 area. All right, we'll also see if we do get, if it continues lower today, if we set up some temporary short-term percent B buys. We technically have one if we closed above Friday's high for both the S&P and the NASDAQ. That's a long way off from occurring, and we need a really interesting day to come in and reverse. So I'm not expecting that to happen. So the NASDAQ is still, both the S&P and NASDAQ now in this flagging pattern. NASDAQ holding up a little better because it's run longer. The Dow also still in a flagging pattern lower. Now remember, the Dow last Thursday closed below the 200. So, and look at this major overhead resistance. Major overhead resistance between about 34,470 to 34,530. Next key support area in the Dow is about 33,950. Let's see. Hey, let's see who's here now. Hey, Anissa. Let's see. Steps to the plate, points to the left field wall, calling the bounce. It's an area, Sterling. Hey, we gotta. Doesn't mean it has to happen, but I like to look where I'm going to watch for stuff to occur. It might never occur there, but it's always good to have targets. Also, let's say you're trading from the short side. It's always good to have target areas, at least to lower a stop. The more you can come up with that ahead of time, the better it is. Instead of in the heat of the moment, what do I do? What do I do? Hey, Christoph. Good morning, Lauren. QQQ from the pandemic low to market high. It hit 87.5. Now we are sliding. Can we assume we'll retest the 62.5? Now I'll look at the longer term on the Qs, options 22. And let's get to the yields in a second. Sterling, Russell closing in on that 87.5 area, 1777. And this is coming into some major support area. Not just from March and May of this year, but also, I'm going to widen this out right now. We're going back to the little wider harmonics now, just to see where the next key level is, about 1760. So if this continues to slide, I'm looking at 1760. And again, this would be a very key area. If the Russell breaks this multiple bottom, watch out below. The VIX... Hey! There we go. It hit the double target. The double on the VIX. All right. So the shift in the VIX to watch for a little more sustainable bounce is about 1720 on a closing basis. Other than that, if this thing keeps moving, what's going to be interesting to see today also, last time it hit the, and again, I'm not saying this is going to happen this time, but the last time it tends to react somewhere besides this getting way through, but you have a lot of volatility around in the VIX around the 200. And we're through to 200. So really watch today, especially if it tries to reverse today where we close in relation to the 200. Simple moving average, which is about 1785. Also the DAX, below. Now finally, it got that low close last Thursday, tried to bounce on Friday and rolling over again today. So the DAX also on any rallies, I'm going to be watching for rollover setups on any rallies. The next minor target is about 15.4 to 15.435. The notes, after completing the little mini double bottom for a little bounce play, rolling over. So next target 107.30. On any bounce play on this, I'll watch for another rollover. Also, in any pullback play in the yields, as Sterling put up there, the yields still marching. The next major target is not until 4.63. So that's interesting. Also, the twos, what do we have here? What do we have here in the twos? In the twos, we'll go off the daily, but right now, that is a little mini potential double. So that could get interesting on the twos for a slightly bigger pullback. But this would, if we got the 10s still climbing or holding firm, and then the 2s starting to pull back, we get more of the bear steepening. It looks like the bear steepening is back in town. The bear steepening is back in town. I just want to see what that looks like. See, on the non-back adjusted, we've now broken this. We'll just keep, for the simple ease of, I can't keep switching charts around all the time, and we're looking at some things on the back adjusted mode, so we'll keep it on this. But this minus 46 basis points is pretty key on the back adjusted chart, and on the non-back, on a closing basis, it's minus 59. So I want to see how, if we get any pullback there, it's minus 59. The dollar, 8 pushing the price. So we got the rotation zone, a single bar pause, and now it's really trying. It's really trying to take out these tops from January and March. That's going to get interesting. If we start breaking through this, you could see a pretty quick run to the 106.90 to 107 area, which would also be the 50% retracement from this corrective move down, which that can, again, continue to put pressure on the markets. The crude consolidating after its run up, getting to cycle bottoms. This is a perfect example. Yeah, it was a slight pullback, but look how well it's held up with cycles getting to the daily bottoms again. And on the weekly, still no rollover. So we're still, crude's still trying to decide. Crude's still trying to decide, but that's going to keep some upward pressure on inflation. We'll take a look at some of these other things, gold and not great patterns. By the way, the mega cap 5, whatever we want to call it, magnificent 5, or you could do the 7s. I'm still keeping on an equal weighted basis to see if this triggers the weekly double. See that nice weekly double and the bottom of the rotation zone? Just something I'm keeping an eye on, because that could be another shift for some continuing pullback. Yen closing in on the 148.85, 87.5. Oh, so close. Does that mean it has to stop there? No, but this is getting into some major prior intervention area. So keep in mind, if you've been long the yen, what's your stops if we get some intervention rollover. The euro, the little mini doubles are pretty much off the table, but continuing weakness in the euro. Any bounce of the euro and the pound, I will watch for rollover plays in those two. Bitcoin still in consolidation. Let's take a look at those spiders and the Qs. The spiders, we have the double, which was triggered on Friday. Now remember, that does not mean you can't get bounces. Also, the stop level for this, remember, this is a pretty big pattern. You can see it on the weekly. The stop level is a close, and it was triggered also on the weekly basis last week. Is on a close above 449.53. So that stop is a long way off, or a trade through for 452. And if you look for this close, remember, as I talked about with the S&P futures, in order to really change the pattern back to anything bullish, you'd have to break above the high from the 28th of August and get a higher close. So that's true also, and that would invalidate the double. Other than that, that's why I will be watching for rollover plays. Rollover plays. There is a gap left behind, so could we easily come up, fill the gap back to the rotation zone on the daily basis and roll over? Yeah. First target, roughly in line with the 200 simple and the spiders. The minor target, 427.85 to 426.40 area. The Qs, here we go. So we have not triggered the double yet in the Qs. Not triggered yet. We'll be watching for that to trigger. The trigger point on the Q double, I should still call it a potential double because it's not confirmed yet. The trigger point is a close on a daily, and I'd also like to see follow through on the weekly basis below 354.71. Okay, the reversal, can we see a bounce in here? We did hit that 87.5 little retracement. Yes, we could see a bounce in here. That does not mean we have to return to this 62.5. My first bounce area would be up to this key close with the rotation zone. So if we get the little bigger bounce, I'd be watching for 364.50 area. But for the long-term Q players, look at this with the bottom of the weekly rotation zone. So it's going to be interesting to see where this week closes. And if the Q's triggered a bigger pattern, then you could, over the next series of weeks, you could potentially, this first target would be really key. 337 area after it triggers. Why that? Because it's the 50 EMA on the weekly, which we have not touched since we broke above it in March. So those are the things. Still, even though we haven't triggered the double on the Qs yet, I will be watching because we have on the S&P, and we have some mega caps starting to roll, especially if those mega cap, the Magnificent Five, start triggering to the downside. We could see the Qs really start rolling over. So I'm watching for rollover plays in the Qs also. Tesla, very weak day. Very weak day. We're going to have the quarterly delivery numbers coming up. Holding this, I've talked about 245. We're pre-market trading below that. So that's now resistance. The only thing that can save Tesla in the real short term is if it can get the close back above 245. Other than that, 237.34 on a closing basis. We get a close below that. I will watch for the retest of the mid-August lows, or yeah, roughly mid-August lows. So that's where that sits. And technically, we still have a weekly double. A weekly double, which just ekes in. NVIDIA, pretty much, well, still the final target is still 405, but any little rally I'll watch for rollover in NVIDIA. I talked about that more. But then if NVIDIA gets the close below this 405 level, not good. You can see 375 pretty quickly. If it breaks down, that's been a very key support area. So keep an eye on that too. And other things, Apple at a very key level. Now, we get the close. If we start closing below about 173.50, the only thing left behind is the gap down open. And then it really gets interesting with the next key target being 169. So lots of stuff poised for a potential breakdown. That's what I'm the Microsoft, the Ohio State, the Microsoft, also coming to key support. That's why we could, if we hold some of these key supports levels, we could see a short-term bounce again. But you're chipping away at these levels now. I went through Tesla after you tuned in. There you go. You should have seen this. Last time a month closed above this level in the U.S. 30-year was March 2010. The last time a month closed above this level in the U.S. 20-year was in June. Thank you for that information, Sterling. That's very interesting. So, XLY and XLC potential weekly double tops. McDonald's hit the first double top target. Again, I've become useless. I'm glad everybody's picking up on this stuff. Yeah, it has hit roughly the first target area. Again, I wouldn't be picky about a few cents here. But on again, McDonald's, any bounce, we'll be watching for the rollover. What else did you say? XLY. What did I type? Oh, I can't even type. Can't type. XLY. Shoot, my levels are slightly off, but XLY. Let me fix this. I haven't been updating on this platform. The qualifies as a double. Not doubting you, just have to verify. And 169, what was the low? 160.93. The close was 160.93, right at the level. closing right at that, and now the gap down this week. So consumer discretionary rolling over. So bounces in consumer discretionary can also be looking for sells. Thank you for pointing this out, MJ. XLC, and then I got to run into the open, but XLC is still valid. The comms, no, yes, it is still. It's a valid weekly double. So we'll be keeping an eye, or I should call it a valid weekly potential double. We should keep an eye on that one if that does trigger. I don't want to see a trigger since the comms have been running pretty hard. I'd like to see a trigger on a weekly basis. You're welcome, Eric. You're welcome, PMG. Thank you, everyone, for tuning in. 1 minute to the open, trading a key level right here at the weekly. Did we come down? We got pretty close to that harmonic. So we'll be seeing if we set up more of a significant bottoming pattern into over the next day. I'm going to be keeping an eye on the 1 hour rotation zone going into the open. With that, I shall talk to everyone later. You are welcome, MJ. Love doing your sector analysis weekly. It's super helpful. I'm glad you've continued to do it, and I'm glad it's helpful, and I'm glad so many people are applying things that they've learned and following through and doing their work. I hope it's made you better traders and investors, and I shall talk to everyone later. Bye for now.